the most important commodities in the world. What are they? How will they impact our lives going forward? And exactly what will drive the prices of these commodities in 2023 and beyond? These are the themes of our discussion with Gianni Kovacevic, founder of LithiumBank. Gianni, welcome back to the show. We've done this once a year now, you and me, for a while. Last year, your outlook was about the base metals. This year, we'll expand that to oil, as well as another commodity that you were recently involved with, lithium. Welcome back to the show.
Great timing as always, David. I look forward to it. Hopefully I have some good data points and some interesting stories, history, and that it's really driving the narrative going forward. It's going to be an exciting decade in my view, and I think lots of peril out there, of course, but where there's peril, there's also opportunity.
I open my remarks by saying that we're going to be discussing some of the most important commodities affecting society. Is that true? Is it really true that inflation is driven primarily by the rise of commodities, including oil, including base metals, including agricultural products? Well, let's talk about inflation first. Was the inflation that we saw this year driven by the rise in commodities prices, or not so much?
What's the root cause of these things? And I think you need to do a PhD on the subject. But I just opened our discussion today. I recall, I just saw recently, it came up on YouTube, and I watched it in its entirety. But in 1980, when they were going into the presidential cycle, which was Jimmy Carter against Ronald Reagan, and Ronald Reagan did an interview with William F. Buckley Jr., Firing Line. Your older audience will remember that. It was a famous show. And it's interesting. This was about the summer of 1980. And he asks them a whole bunch of questions, but he talks about the OPEC nations and how they're taking advantage of America, and they keep rising and raising the price of oil. So Reagan answered it this way, very interesting. He says, well, that's what some people are saying, or are they saying because when OPEC was established, it was understood that they would sell for every 10 barrels of oil, they would be able to buy 1 ounce of gold. Now, the price of gold, of course, back then, $35, but the price of oil after World War II, all the way up until the early 70s, went from about $2.50 to $2.50 to $3.50. And all of a sudden, when America went off the gold standard, Reagan suggested that maybe with this price of oil that kept climbing, because by 1979, the price of oil went to $38, David. So it had a dramatic increase. But what Reagan suggested at that time in that 1980 interview, he says, maybe what these OPEC nations are telling us, we will not trade a barrel of our oil for your devaluing US dollar. We still need to maintain this very, at the time, a very holy ratio where if we give 10 barrels of oil, we need to be able to buy 1 ounce of gold. And that was very interesting and very poignant that someone like Ronald Reagan would say that. And so now, as we look at what's going on with the war and pricing mechanisms and effectively, 5 billion people in the world really don't care about the Russia-Ukraine war. You look at India and China, they continue to trade with their products and they're going to continue to buy them. You look at the Minister of Petroleum and Natural Gas in India, not China, India, Hardeep Singh Puri, and he went on CNBC and they were riddling him with questions and why and how could you support the war? And he said, no, it's about my people. I've got 1.4 billion people. They need to eat, they need energy, and we're here to do commerce. I'm not going to get involved in the politics. This was the Indian Minister of Petroleum and Natural Gas. So it's fascinating. And now you have the Chinese. They're saying, we want to create a greater alliance with Saudi Arabia. We want to be your client for the long term. But how are these trades going to get settled? Because as everyone knows now, Russia said we will not sell our oil unless we are paid in rubles. And now the West is saying that we cannot allow people to trade or carry Russian oil unless it's done at a certain fixed price. But these other people, they don't care. They want the product. So this whole pricing mechanism, US dollars, gold, oil, it's all, I think, changing, and be careful what you wish for, because we are going into a new paradigm of way things are looked at, the way they're priced, but ultimately they're going to be consumed.
This shifting paradigm, has it deeply impacted the price of these commodities in the past year or so? We've seen a price rise in the oil, crude oil market, for example, all the way up to above $120 a barrel, and it's come down since the summer. Let's talk about the oil market first. So in the first half of the year, we saw turbulence in the geopolitical sphere as Ukraine was invaded. Later on throughout the rest of the year, you can see a correlation between the CPI index and oil. How much of this is just coincidence, Gianni?
Well, it's interesting that ever since all the commodities kind of went up, as they so often do, they all go up and sort of went in unison, and then they all sort of rolled over at the same time. And it's interesting because there's been price pressure on commodities for most of 2022. And that's why people that watch this program, that follow resource shares, have seen that destitution and despair, because when the commodities roll over, there's less confidence in the shares. And that's exactly what we've seen ever since around April, May of last year. All of these things have rolled over. So yet we have inflation. So is there going to come a time where the prices rolling over are going to get factored into this? And I would submit to you that, I'm over here in Europe, but if you talk to anyone on the street, people say a recession's coming, a recession's coming. We are in a recession, or we were in a recession. The confidence of Joe Average on the street was very low. There was a lot of pessimism. And then when interest rates were increasing, you had also this real estate values and your ability and your spending power, it's all been compressed, and there's nervousness. So I think the way these things are going to be priced right now, there's a discount because the Russians, if there is some sort of delivery pressure on Russian products, and then people like India or countries like India or China, Pakistan are saying, okay, we'll take it off your hands, but it needs to be done at a discount. So that's what's happening right now. It's not real price discovery. But commodities, we always say this, running out of a commodity doesn't matter until it matters. And then it matters a lot. So we are ongoing. I think that this is going to be a commodity super cycle, if you will. I think that especially the things that feed into the future of energy, but there's going to be this year, I may be a little bit nervous, but I would say as we go through the rest of this decade, this is something people are going to be following very carefully. And there's going to be, I think, prices, the charts are going to be going from the lower left to the upper right of your screen for all products.
Let's come back to that statement. Commodities running out doesn't really matter until it matters a lot. Are we there yet? Is there any commodity that you follow that is at risk of running out right now?
Well, we saw drawdowns in copper. Certainly, if anyone has seen those graphics that show warehouse levels of copper for the last 5 or 6 years, we are, last year we went down to about 100,000 tons, or put it in a different way, of the amount of copper that we use every single day. How much copper is in warehouses? Now I'll say on warrant, off warrant, stuff that's visible and invisible. We were down to about 4 or 5 days. That's it. Normally you have a few weeks or of available inventory for what the world is consuming every single day in copper. The drawdowns have already occurred. So this is fine. If the global economy is going to be very negative and there's no growth and people aren't consuming more copper and we're not building any copper mines, who cares? It doesn't matter. It'll balance out. But if there is a CAGR growth rate in the consumption of copper, and I don't lose any sleep about this, I've said this many times, we've talked about this since the past 5 or 6 years, there is an ongoing pivot to electrification. The greener and cleaner that energy is created, transferred, and utilized, the more that is demanded of copper. So even in a recession era, you can see at least flat or still growth in copper, but recessions don't last forever. They don't last 10 years. This is something that you are going to see CAGR growth rate in copper, and that is offset by a lack of investment, lack of funding. So that's one particular commodity I think still has a very interesting 2020s, and it's something I don't think that's kind of a front page story now. I don't think people really need to be convinced about that, but it's the nervousness I think that's just happening. Where will interest rates stop? How will this war situation be resolved, and the greater conflict, which of course is between I think China and America, and how is that going to play out over the next 2, 5, 10 years?
You know what's interesting is that copper is now it's seen as one of the EV metals. It's used for a variety of different industrial products. Electric vehicles is just one of them. Lithium, of course, is the big EV metal. Well, let's talk about lithium next, and then we'll get back to your forecast for all these commodities. Lithium saw a huge price increase this year. I want to ask you, Gianni, why is it that lithium and copper perform differently this year, given that they have similar use cases? I'm not saying they have the same use cases. Copper has a more diverse use case, or set of use cases than lithium, but lithium went up this year. Copper saw a similar price pattern the year before, going up in 2021 and then tapering off a little bit afterwards. So they're correlated, but copper is just 1 year advanced. That's what the chart shows. Can you explain why the prices have behaved differently, even though they're both used in electric vehicles?
Well, lithium as a mainstream commodity is still new. It hasn't went through 3 or 4 boom-bust cycles, which takes 40 or 50 years of the classic well-used commodities. And the reason is because if the lithium is there, it's going to be consumed. The growth in batteries wants to be, in excess of 1,000% over the next 10 years. Now, you can argue, can we build these batteries? Are the chemicals going to be there? But if the lithium is available, it is going to be consumed by the technology and battery and automotive companies around the world. That's the rest of the 2020s. Where will the lithium come from? It is going to come from advancement and technology, R&D. And the future of lithium is going to come from reservoirs, briny water, typically from, the holy grail for that is Alberta, Saskatchewan. That's where the biggest reservoirs are, albeit they are in California, they're in France, they're in Arkansas, they're in Germany. And there's 2 stories that need to be put together here for people to really understand how this happens. So in 2017, Exxon purchased a land package from the Basque family in West Texas. They paid $6 billion for 275,000 acres. Now, this acreage only produced 18,000 barrels a day, but that wasn't the headline. This is the famous shale formation, and Exxon was buying that for the future. Why? What happened to the oil and gas industry through the early 2000s? Well, everyone knows what horizontal fracking is today. And as they solved that, the industry, all of a sudden, these vast packages of land that had these shale formations became very valuable, and it happened very quickly. So it was effectively the merger of 2 companies, George Mitchell's company, which was doing really vertical drilling and fracking it for natural gas north of Dallas, Texas. And you had Larry Nichols' company, Devon Energy, which was doing a lot of horizontal work. They merged the 2 companies together in 2002, and they drilled the first horizontal frac well for gas. They did, and I'll paraphrase here, 7 in their first year and around 50, 55 in their second year, 2003. David, did you know that they ended up switching to oil around 2009, 10, 11, but by 2014, the North American oil and gas industry had done 150,000 horizontal frac wells. They literally reinvented the wheel. And all of a sudden, these packages, these land packages that had shale formations became very valuable. Yep. The same thing is happening in lithium, because where does lithium come from? It comes from a salar in South America that everyone's very familiar with, and there's the evaporation, which takes place over 6, 12, 18 months, or it comes from hard rock mining. But the reservoirs that I'm talking about, which is what LithiumBank is focused on, takes this briny water, it pumps it up to surface, which has lowish concentrations of lithium, but through a very simple process, it's able to lift the grade of the lithium, and then it goes through a final chemical process to create a lithium product that can go into a battery of the future. There are thousands of people working on this, and that's where the future is. So the good news is that as more lithium is produced and provided to industry, it's going to get taken up. Price, we can argue, it's an elevated price, it's been an elevated price, but it's still the commodity for the rest of this decade. And it's going to be fascinating to see how quickly the industry can start having these complementary technologies that keep having a cumulative effect, and it changes the perception of how that industry is changing, and more so from these reservoirs that come from the jurisdictions I just talked about. Yeah.
All right. So I'm looking at this diagram from the Government of Canada. Lithium global use is 71% batteries. We talked about that. In terms of the world production, or world mine production of lithium by country, Australia is at the top, and then you've got South America, Chile number 2, China, number 3. Now, going back to your point about fracking, yes, fracking was one of the pivotal moments of the American energy industry. America went from a net importer to the largest oil-producing country in the world, excluding the OPEC bloc. However, can we see a fracking moment for lithium? Are there even enough reserves in the U.S. for the U.S. to be self-reliant on lithium production?
The projects are there. So LithiumBank, as an example, we have 4 million acres of concessions in Alberta and Saskatchewan. And it's interesting because recently there was a takeout of an Australian lithium company buying a project, I believe it's called Prairie Lithium in Saskatchewan. And there was also another company that was floated in Saskatchewan, and the auction regime that takes place in Saskatchewan. So you pay money to get these licenses. What are they trading for? Well, the transaction value of Prairie Lithium, $200 an acre. If you look at recent auctions, $100 an acre. The days of the cheap concession or tenements for these reservoir brines in Canada are over. So we think it's very interesting to have a company that has such a large land package, and we are looking at the collateral benefit that the industry collectively comes up with. So every time there's a success with another company with this type of technology, be it direct lithium extraction, DLE, or the ability to lift the grade of these lithium projects, or more importantly, as larger companies take interest in these type of projects and these type of reservoirs, this is happening. It's happening in real time. But of course, when you look at with the example for horizontal fracking for oil and gas, that was a 15-year story. That was really an overnight success story, but it took place over 15 years. You know, in the lithium space, we're only in year 3, 4, or 5, depending on what we're talking about, what technology or what project. It's just getting started. It is a very current story, but more importantly, as we transition from, and this is a long, long process. No one's going to say that we're going away from oil tomorrow, because that's just ridiculous. Oil is going to be an important commodity for the rest of your life. The difference is less and less oil is going to be burned into a fuel for an internal combustion engine, and more so, it's going to go into an enhanced product that's going to be used for many, many years, but not burned.
It does seem to me, Gianni,
away from that, it's going to be going into electrification of transportation.
Is this a fair statement to make, Gianni, that lithium, given that it's a major commodity or a very important commodity in the construction of EV batteries, lithium will be the oil of the 21st century? Evaluate that statement.
I can do better than that, David. It's the prize. It is the absolute, the magic ingredient, because there's going to be substitution, but lithium and copper are going to be two mainstays in a battery. And if you recall another story from history, when they discovered oil in Saudi Arabia in the 1930s, and then they Harald sent de Gaulle and his team to assess, what does this mean? What does this discovery of oil in Saudi Arabia mean for the world? And they came back and they said, sir, you don't understand. This is the single greatest prize in all history, the oil in the Middle East. And it was. Look what it did to the world. And look at the comfort and convenience that it has brought to us and Western civilization over the past 80 years. But going forward, when the new greatest prize is, and I want to talk about the company based in Northern California named after a famous Serbo-Croatian scientist, but the trifecta of having the ability to produce electricity, namely on a roof, being able to store that electrical energy, and being able to use it whenever needed, or put it back into the grid, and more importantly, drive your transportation from that trifecta. All of a sudden, you're independent. And that is the new greatest prize, is to have that independence. It's circular. And yes, it does take commodities to build these things, but once you have this circuit built, I'm talking about solar panels, battery, an electric vehicle or truck or delivery van, that runs for 20 years. And there are no emissions. There is very little service. This is the new greatest prize. And as this is rolled out in the millions, and there's no stopping it, because the power economies of the world are making this pivot. That's where they're driving. And the CAGR growth rate of those key inputs, those key inputs to make that trifecta work, which is, of course, electrification and the storage of electrification. I'm talking cables, I'm talking copper, And I'm talking about lithium in the billions of batteries that are still to be built.
How do investors participate in this revolution?
Well, first of all, you're speculating, because if either you're buying a production story, and some of these lithium production stories have done fantastically well. So what I'm doing personally is with LithiumBank, we've got a couple different edges. We've got 4 million acres. We've got 4 major projects in between Saskatchewan and Alberta. And as the industry keeps moving the chains forward, we get a benefit from that. But we also have our 4 development projects. So as the technology is improved by other people's money, and as there's more confidence, we get the benefit of that because we happen to have a multi-project company. So certainly I created the company, just like I did Copperbank before. I did it for me and my family. And it's certainly a way that I'm speculating on the sector, on the commodity, on the jurisdiction, and on the technology. And I think it's something that people can, even if they're not interested in buying shares, just to use like a website like LithiumBank, because of all the video information and all the learning that can happen within all the overall sector, and what's happening in batteries, what's happening in energy. And I think that's a great sort of a litmus test or barometer, and it's something that I can recommend for people. And for full disclosure, of course, I'm one of the largest shareholders and the founders. So it is a speculation.
Mm-hmm, for sure. All right, so give us your outlook on lithium, and then I want to close off with the other commodities. Now, the price has gone up tremendously, like I mentioned before. It's more than quadrupled in the last year. That's, first of all, what happened between 2021 and the middle of 2022? Why do we see a sudden skyrocket of prices?
It's just demand, overwhelming demand. And as new product came to the market, there's all these different companies, because there's so many technology companies, battery companies, automotive companies.
Is it because of the shortage? Sorry, is it because there was a global shortage of components?
Ongoing shortage, or don't call it a shortage, but just demand is there. As I alluded to before, if the product will be there, the demand will take it up.
It was during COVID. It was just
astounding to me. Shortage. We just say there's always a customer waiting to buy it. There's multiple different continents with multiple different industries, multiple different companies. And so I will submit to people that will continue. However, did the price deserve to go up that much? Probably not. I don't think any company is doing any of their economic models with these prices. So if the price went from 10 or 12,000 to 80,000, a company like LithiumBank, we're going to use 20 or 22,000 for our economic model. You should not be using these high and elevated prices. If a project cannot make it at a more normalized level, I think it's too aggressive. So because it's not your classic shortage, and as I've already alluded to, it's one of these things where if the demand is there, and it will be there, if the product is there, they will be met. So it's going to be a tough one. I think that this is a commodity, but I would say the takeaway here is stronger for longer or higher for longer. Meaning, I don't see us going into a lithium depression price where what we did see with oil or copper or other commodities, if we calculate over the past 5, 6, 7 years, there were some pretty dark days there, David, where copper was $2 and oil went down to $25, $30. I don't see that happening in lithium, albeit it would be normal in a pricing cycle to see the lithium price roll over and come down to some sort of more normalized level.
Yeah, Gianni, wars have been fought over oil. Can wars be fought over lithium in the future?
Well, it's going to be interesting to see what happens. Where if we look at where all these evaporation lithium projects, where they are, just by geological endowment, this is in the Atacama, this is in Argentina, and there's a little bit of project fatigue in Chile across the board, even in copper. So, are we going to get the runway and the permit to build more lithium projects or copper projects of that kind of scale in Chile? I think it's going to be tough. And then if you're a bigger company looking to invest many billions of dollars, another thing that is an unknown now in many countries that have these established resources in production is what's the tax regime going to be 2 years, 5 years, or during their next presidential election or after it? These are unknowns. What's the royalty regime going to look like in those jurisdictions after the next presidential cycle? And as more people want more things. Because what's always happened in Chile, when the price of copper went higher, everyone demands more. The unions want more. the citizens want more, and it's all taken on the back of the copper miners. They always end up having to pay for these things. But the problem when the copper price rolls over, that those legacy costs remain. I submit to people, for these types of businesses, you still want to be, for certainly oil and gas, is interesting, where you have certain jurisdictions like Texas or like Alberta. And for lithium, as this continues to be more of a front page story, it's going to be something that I think Alberta and lithium are going to become synonymous, like Texas and oil. And I think that's what we're going to see, and time will tell.
All right, so you've given your long-term thesis for lithium, thank you. In the medium term, short to medium term, so I'm talking about the next year or next 2 years, which of the following commodities I'm listing now do you think has the best investment potential? So lithium, copper, oil, or gold? Let's just stick to these four for now.
Well, the gold has been, held back, or it's kind of trading in a really strange sideways pattern. It would make sense for the gold price to finally appreciate and capture some of all what's gone on in the world, including different scares. Oil has the added sort of unusual situation now, where because of this attempt to cap the price of Russian oil and this requirement or this look for a longer-term relationship between countries like China and India with other oil producers, and certainly they don't want to pay a lot for these commodities. Are we going to see a big bonkos escalation in the price of oil? Well, oil is political. It will always be political. If you turn the dial, the danger dial on politics, you could see a much higher oil price. But who wants to bank on that? And who wants to live in that kind of world? And how can you sort of invest or speculate around that? But the interesting one is copper, because copper has already had its big drawdown. There's been a couple of Robert Friedland's amazing, fantastic project in the Congo has come online, and I think that's something that's still going to be expanded. And you have Teck's Kiribati project, which is also now going to start adding a product to the market. But I don't see a lot of surprises on the upside. And the reason I'm saying this, David, and this is very important for people to understand this next point. In the disruption business in copper, we have not had a lot of that. What I'm talking about, in 2003, in October, in an already tight copper market, we had a huge pit collapse at the Grasberg copper mining complex in Indonesia. At the time, it was the second largest copper mining project in the world. If there's a problem at a major copper operation, because we are operating on an onion skin already, it's balanced to a shortage, and we've already drawn down the market. Every year, a little bit came out of warehouse, a little bit came out of warehouse. There's nothing left. There's nowhere else to go to. So if you would see political problems or technical problems at one of the 10 or 15 or 20 largest copper mines in the world, you instantly will see $1 a pound on the copper price. And we also have not factored in real inflation. If inflation is truly 8, 9, 10%, and if the value of the US dollar has decreased by 30 or 40% just by vis-a-vis of printing of US dollars, it would be reasonable that we would have an inflation-adjusted all-time high in copper, and probably higher. And we can't count on that, but if there was a problem at a major copper mining operation, you could see copper at $8 or $9 or $10 a pound. But just on an inflation-adjusted basis, copper, in 2011 it was $4.55 a pound. Today, that tells me it should be $7 a pound, all things being equal. That all-time high of 11 to what would be an all-time high today. And so I think there are these important caveats that people have to be cognizant of, and they happen one day to the next. And there's no surprises to the upside. Oh, we found a bunch of copper. Oh, we got everyone's running more efficient copper mines now. Oh, we produced 10% more than we did last year. You're not going to get any of that. We get depletion, lower and lower grades in mines. The surprises are all to the downside, meaning to less production coming out, not more. So unlike oil we can surprise to the upside if we get less friction in the system.
Gianni, you seem, just to push back slightly on your thesis, you seem very optimistic about the prospect of the industrial utilization of some of these commodities, given that we are perhaps, I'm not saying we will, but perhaps entering a severe recession next year or perhaps the following year. Has this weighed into your analysis at all?
Well, in my view, we already are in a recession, certainly mentally. For the average consumer on the streets, they have already tightened their belts, at least mentally. So I would say that the recession is, or the thinking of, or the feeling of, or the semblance of a recession is already with us, and recessions don't last forever. So let us assume that 2023 is epically bad, and we truly do have just a cataclysmic recession. Okay, how much of that is already priced in? Some of it's priced in my view. At least I'm speculating that way. And so when I correlate now, okay, the price of copper went to $5 a pound and rolled over. And when commodities roll over, David, you're always climbing a wall of worry. If people can know. Remember last year, even though copper was at $4.50 a pound, there was pessimism. There was disillusion. There was no euphoria. Copper shares were all falling. They weren't going up. They were going down. And if you correlate that, and if you're honest with yourself, and I've owned copper shares for 25 years, even though the copper price is $3.80 a pound, right? I will tell you, if you look at a basket of these copper juniors, it's like copper was $2.50 or $3 a pound. So some of that's already priced in, this negativity, this pessimism. So I don't think that even of course, if things get really bad and the main exchange goes down, the main stock exchange, I'm talking the Dow, S&P go down by 20%, that's not good. That's a negative. Your share is going to probably be worth less in that environment. But the damage has already been done. The shellacking on your favorite copper junior Explorco, well, it's closer to the bottom than the top. Already happened. So you have to at least be current. You have to follow these things. And as you understand, and I've said this before, the DNA of any given stock that you followed or owned over the years, you get a sense of it. You get a smell. You know, I need to start owning this at least a little bit. I need to own this now. And I think we're in that environment where you still got to watch liquidity. People, the positions I have are a little bit larger, and the one in Faraday, my legacy position from Faraday Copper, and my position in LithiumBank. So, but certainly anything new, I think is time to not only have your toes wet, but you need to have your ankles wet, ankles or knees, and then see where this takes us. But the report card is the copper price, and the copper price is telling us something. It wants to go higher. It's at 385 today as we talk about this interview, and it's factoring in the less value of the US dollar. It's certainly this is not a fantastically high copper price. This is a boring, rather low copper price, and it still will not incentivize major mining companies to build new copper mines. You're not getting another wave of production coming from any investment today that'll benefit us 3, 4, 5 years from now.
I want to talk about, finish our segment and talk about electric vehicles now, specifically the auto sector and how that impacts the base metals and the strategic metals we've just discussed, Gianni. I'm just going to read you a headline from an article from Yahoo a couple weeks ago now, but I think the story might still be relevant. It says, drop in demand for electric cars as cost of living bites. So inflation's going up, people are buying fewer electric cars. It says, demand for electric vehicles is falling amid the cost of living crisis and doubts about the government's electrification ambitions, new figures show. Auto Trader said EVs accounted for fewer than a fifth of new car inquiries sent to retailers through its online marketplace last month. That is down from 27% in June. Is this lower interest and demand a sector-specific problem, or is that just because everything's going up and people are just spending less money?
I think that's, as I said before, people are already in the mindset of a recession. They're spending less. But remember, we're talking about copper here, so let's talk about copper. And all I care about is the demand of copper. I don't care about the automotive industry and how healthy it is or how unhealthy it is. Of course, we want it to do well because they consume this product. But collectively, 10 years ago, and the automotive industry was about 90 million units a year, and that's changing globally. That's what we make, and that's what we consume as global consumers, right? So how much copper did the global automotive industry use 10 years ago? And then even in a situation where, let's say now car sales go down by 5 million units, David, but now we have 5 million electric cars, because an electric car consumes 4 to 5x more copper than your average internal combustion engine vehicle in aggregate, even though sales are down. the industry will use more copper. And so to talk about where we're going to be as an industry, automotive industry, 7 years from now. So we're already in 2023. Okay. So for me to talk about the year 2030, this is around the corner. This is a model year away. And you have where most of the people live, or where most of the progressive governments around the world either are mandating cars to be electric so you don't have a bloody choice, or there's this political will. In Europe, for example, this is already happening where X% of cars must be electric. So I don't care, is it going to be 20% or 30% or 40% of car sales in the year 2030? Are they going to be electric or not? And if car sales are even falling in aggregate, the car industry year by year is going to use more copper year by year, David, even in falling sales, even because there's consumer behavior and people are driving less and they're using Uber and doing different things, because it'll offset. For every 1 million of cars that go down in sales, there's going to be 2 or 3 or 4 million more electric cars on the other side. The copper industry is going to be very healthy. And every time another million electric cars are made, there is, with those progressive governments I was talking about, is not to be like you see people joking and using a petroleum generator to charge their car. No, it's about having the solar, wind, or otherwise creating the electricity, either directly or storing it in a battery, and then using the electrical transportation. So that is a power of magnitude more copper. To have this trinity, as I talk about, the battery, the car, and the solar roof, or wind, and or if it's LNG, peaker power for wind and solar, if you don't have the efficiency, because it doesn't work all the time. You do have to have peaker power. And the instantaneous peaker power is always going to be done best with natural gas. It's instantaneous. Coal takes too long, nuclear takes too long. It's baseload power, but it's not peaker power. And it's best suited with natural gas, LNG, and it will continue to do so. And just listen to the world's largest electrical company, Enel, run by Francesco Starace. What does he say? He runs power in 30 different countries. That's the trinity. That's where you want to be. He is not going towards nuclear energy. He's going towards what I just talked about, because it's cheap. It can be built readily quickly, and the prices continue to fall particularly for solar and for wind.
People might not know this about you, but in 2016, you wrote a book called My Electrician Drives a Porsche, Investing in the Rise of the New Spending Class. How would you update this book today?
Well, the book is incredibly current. So if you were to reread it now, I think a lot of the themes I talked about have come true, even more so. And it continues to go on that operative where we, across the world, we want to have more comfort. People are going into the future. It's about technology, and it's just the right thing to do, you know. And people still have choice; they can do what they want. But the book has nothing to do with fast cars, David. It has everything to do with how a youthful electrician enlightens his family doctor at the magnificence of electrification and how it will be the future of global energy. Right. So how can we move energy over a long distance? You can do it with a pipeline, moving oil or natural gas. We can move it on a ship or a truck, or you can even create electricity and you can move it 2,000, 3,000, 4,000 kilometers and then use it where industry is. Nice. And if you were to tell someone who worked in the electrical industry, doing high tension lines in North America 40 years ago, if I was to tell them that the Chinese are moving electricity 3,000 kilometers on 800,000 volt DC lines, they would fall out of their chair. They wouldn't believe it. It is incredible what's happening in electrical energy. It continues to happen, and it is the future. And it's going to be more and more so, where final global energy is going to be consumed for basic products with electrification.
I do want to end our conversation and talk a little bit about fast cars, because I'm a fan of fast cars and electric cars in particular. I know you were quite famous a few years back for driving across the country in a Tesla. You've documented that on numerous media all around the world, including on Kitco, actually, quite a number of years back. Is Tesla still going to be the dominant electric vehicle provider of the future of this decade? Everyone's doing it now. Mercedes, BMW, Audi, Porsche, arguably better, more luxurious, better performance. What's Tesla's game plan now to stay competitive?
Well, the electric car for Tesla is almost a red herring. Now, that's my own opinion. Of course, maybe I'm being a little facetious here, but if you look at this, their battery management system, the way they develop their charging network around really the world, the developed world, it's all over China, Europe, North America. You can drive from any point to any point very seamlessly. And the way in the future, how the electricity is actually generated and consumed, you disintermediate the entire global energy system with efficiency in that trifecta. It does work. It is working. What's the value of that? I don't know. So let's leave the cars aside. But if you could have a global network of fueling stations, what's that worth? That's exactly what Tesla has. It's there. It's every.
Is there a private company doing that? Is there a private company?
Not at that scale. Not at that scale. No one has had the ability, even with Volkswagen after Dieselgate, and they had the $2 billion fine to go and build charging networks across North America. They are just embarrassing. The incumbent automotive industry has not been able to do, not even close to what Tesla has done for charging infrastructure. Convenience. There's no fear of charging or fear of not working. There is fear, and I can tell you, I had a little BMW i3 over here in Croatia. When you drive in the freeway here and you go around, depending on what route you take, they still, if you can believe it, in the year 2022 as it was, there are gas stations that have 30 nozzles for fuel and one singular fast charger. That tells you the will just wasn't there. Yeah. So their advantages are not just the car, it's other things. I can't tell you what the market value or what the worth of that is, but if you could disintermediate the entire global energy system with a program, which is what they have between the cars, the trucks, delivery vans, batteries, and a solar roof, doesn't have to be their solar roof. And if you're honest with yourself, and if you have the initiative, it's not perfect, it's not going to work for everything, it's not going to work at airports and different things, but it does work. There are millions of satisfied customers who actually have tried it. Because when I drove across America, David, it was appalling how many people had an opinion, but they never tried the product, or they were wrong, or they would make an assumption. And I said, no, you're wrong. I'm driving 15,000 miles across America. Trust me, I don't care. But if you really do, you want to know how it works, or if you want to experience it, that what you're saying or what you believe this is incorrect. It works. It's magnificent. It's the solution. You don't have to have it. If different horses for different courses. If I'm going to go hunting in the wilderness, I'm going to take a pickup truck and probably not going to take an electric vehicle. But for most people's daily lives, it's the answer. And I'll say it again, it's the prize. It's the single greatest prize in all history because it gives independence and it localizes energy and it does not require people to be dependent on so many other factors. And even for one more thing, people always say, well, it takes too many commodities or it takes too many emissions to build it. Yeah, but when I build a wind turbine, it's there for 20 years. You burn fossil fuels to make it, but then it's there for 20 years. When I build a solar project for myself or for our community, it's there for 10 or 20 years. It's not like you do this endlessly where you're burning a coal power plant where just every single day it never ends. It makes sense to have math there where you say it's going to take so much effort to build this network, and then we have convenience for a decade or two decades to come. And the single biggest winner is you and me, the consumers, David. We win. Thank goodness so many more automotive companies are getting involved because we'll see where we play out in the next 5 years. But Tesla has a huge advantage on many other areas, not just the car.
All right, excellent. Well, eyes on the prize for investors and consumers alike. Thank you, Gianni, for a very enlightening talk. Thank you for giving us your outlook for the year and beyond. I appreciate your time as always.
It's been great, David. I wish everyone a very prosperous 2023. It's going to be hilly. It's not all roses in the garden here, but I think it's going to be an exciting decade for people following the themes that we talked about.
Yeah,
so we'll see. And we'll probably next year in January, we'll talk again.
For the long term, absolutely. All right, Gianni, thank you very much. And thank you for watching Kitco News. I'm David Lin. Stay tuned for more.